Hello everyone, welcome to Educare 247. This is the 15th lecture on our special revision series for SEBI Grade A 2020 examinations. In this lecture, we will be studying the MCQs on business cycle. Business cycle is a part of the syllabus of economics for SEBI Grade A 2020 examinations. We have already prepared video on demand and supply and market structure. You can go through those videos to understand what kind of questions will be asked in the exam. Now coming to the first question, which of the following does not occur during expansion? A. Consumer purchase of all types of goods tend to increase. B. Employment increases as demand for labor rises. C. Business profits and business confidence tend to increase. Or D. None of the above. So the answer here is D. None of the above. See, the question here is asking which does not occur, right? So all of these, they occur during expansion. Hence the answer is none of the above. Now let's look at the four phases of business cycle. They are your expansion, peak, contraction and trough, right? So now what happens during expansion? The expansion phase is characterized by an increase in national output, aggregate demand, employment, capital and consumer expenditure, sales, profits, rising stock prices and bank credit. Then involuntary unemployment is almost zero, so the unemployment is very less. Prices and cost tend to rise faster because there is increase in demand, so the prices and the cost, they also rise. Good amount of net investment occur, so businessmen, they are very confident about the future, they are optimistic, hence they invest in their businesses and net investment occur, and demand of all types of goods and services rises. There is altogether increasing prosperity, and people enjoy a high standard of living due to high levels of consumer spending, business confidence, production, factor income profits and investment. So all these things, they happen during expansion, and when the economic growth is at the highest, then we call it a peak, right? Peak is the highest point of expansion where the demand reaches its highest and then it starts to stagnate. Then after peak comes the contraction phase where the economy starts to turn downwards, where the demand decreases, and along with demand the national output decreases, and then unemployment increases. So the negative of expansion happens in contraction, and when the economic downturn, it reaches its lowest point, we call it trough or depression. Question number 2. Which of the following is not a characteristic of business cycle? A. Repercussion of business cycles get simultaneously felt on nearly all economic variables. B. Business cycles occur periodically although they do not exhibit the same regularity. C. Business cycles have uniform characteristics and causes. Or D. Business cycles are contagious and unpredictable. So the answer here is C. Business cycles have uniform characteristics and causes. Now let us look at some of the features of business cycle to understand business cycle better. See, number 1, business cycles occur periodically although they do not exhibit the same regularity. So they are not regular. Sometimes the expansion can last for a longer period than contraction, and sometimes the opposite can happen, right? The longest expansion recorded in history was the expansion in US from 1991 to 2001. That is 10 years of expansion period. But sometimes only 6 months of expansion have also been recorded in history. So you can understand how irregular these business cycles are. Option 2. They do not have uniform characteristics and causes. They are caused by varying factors. Therefore, it is difficult to make an accurate prediction of trade cycles before their occurrences. So it is difficult to predict whether expansion is going to happen or contraction is going to happen. C. Repercussions of business cycles get simultaneously felt on nearly all economic variables, that is on output, employment, investment, consumption, interest rate and price levels. So all these variables are affected by business cycle. And the last point, business cycles are contagious and are international in character. They begin in one country and mostly spread to other countries through trade relations. See, in this era of globalization, all the countries are connected through trade relations, right? So if the economy of one country gets disrupted, then it also affects those countries that are in trade relation with that country. So that's why business cycles are international and contagious in character. Educare offers various courses for SEBI Grade A examinations. We have comprehensive courses for SEBI Grade A 2020, which includes the syllabus of both Paper 1 and 2. Then we have MCQ courses for SEBI Grade A 2020 Paper 2. And we have SEBI Grade A 2020 Crash Course for Phase 1 and 2. You can apply with coupon code SEBI, SEBI and avail discounts on comprehensive courses and crash courses. However, since MCQ courses are already at a discounted price, no further discount is available in this course. You can enroll on these various courses on the basis of your stage of preparation. Now moving on to question number 3. The sectors that are extremely sensitive to business cycle are A. Durable goods and service sectors, B. Non-durable goods and service sectors, C. Capital goods and non-durable goods sectors, or D. Capital goods and durable goods sectors. So the answer here is D. Capital goods and durable goods sectors. Although all sectors are adversely affected by business cycles, some sectors such as capital goods industries and durable consumer goods industry are disproportionately affected. That means they are affected more in comparison to others. Moreover, compared to agriculture sector, the industrial sector is more prone to adverse effects of trade cycles. See, these non-durable goods, they generally fall under the category of necessity, like your foods, your clothes, your daily items, personal hygiene items, right? So these necessities have to be consumed in any phase, right? Whether you are in expansion phase or contraction phase, the necessities are the necessities of life, right? You require them. But the capital goods and the durable goods, they come under the category of luxury. That is, you do not need these goods to live, right? You can postpone investment in capital goods and durable goods till the economy expands, right? So in downturn, the capital goods and durable goods sectors are affected because people do not want to invest in these during economic downturn. Hence, they are extremely sensitive to business cycle. Question number 4. Which of the following is not an example of coincident indicator? What are coincident indicators? They are the indicators, the variables that change along with the change in economy, right? So your options are industrial production, inflation, retail sales, or new orders for plants and equipment. So the answer is D, new orders for plants and equipments. See, new orders for plants and equipments, they generally fall under your leading indicators. Now let us look at a few examples of leading indicators. Changes in stock prices, profit margins, indices such as housing, interest rates and prices, new orders for consumer goods, new orders for plants and equipments, index of consumer confidence and money growth rate. So all these are examples of leading indicators. Now what is a lagging indicator? Lagging indicator is an indicator that changes after the change in economy, right? So examples are unemployment, corporate profits, labor cost per unit, interest rates. Now you must have noticed that interest rates was in the example of leading indicator as well, right? So interest rate, they sometimes fall under the leading indicator category and sometimes under the lagging indicator category. The consumer price index and commercial lending activity. Now moving on to coincident indicator, the examples are gross domestic product, industrial production, inflation, personal income, retail sales, financial market trends such as stock market prices. So sometimes these indicators can overlap each other. That means they can fall under one or both or all the above categories, right? But generally, the new orders for plants and equipments, they are considered an example of leading indicator. Question number 5. Which of the following is the cause of business cycle? A. Fluctuation in aggregate demand. B. Fluctuation in investment. C. Fluctuation in government spending. Or D. All of the above. So the answer here is D. All of the above. Let us look at some of the causes of business cycle. Now the first cause is fluctuation in effective demand. So the more demand there is, the more growth there is in the economy, and similarly vice versa. The less demand, the less growth. Fluctuation in investment. Also, if there is more investment in the economy, if businessmen invest more in capital goods and durable goods, then there is more economic growth. And if they do not invest, then there is less economic growth. Variations in government spending. Now the way government spends, how much it spends also affects your business cycle. Macroeconomic policies. Now there are certain macroeconomic policies such as cut in tax rate, decrease in tax rate, or decrease in interest rate that causes the economy to grow. Because when the tax is less, people have more money to spend, right? Similarly, when interest is less, people have more money to spend, so they spend, and the demand of goods and services is more, so this leads to growth in economy. Money supply. Similarly, the more money is in the market, there is more money to invest, and there is more demands for goods and services, so the effective demand increases and the economy grows. Now, psychological factors refers to how optimistic or pessimistic you are about the future. If businessmen are very optimistic about the future, then they will invest more in the business, and the more they invest, the more the economy will grow, right? During the wars, we have generally seen that economies collapse, right? But the post-war reconstruction phase is the recovery phase, where slowly everything is rebuilt, the roads, bridges, houses are rebuilt, and economy starts to gain momentum. So these economic activities, they move towards expansion. Then natural factors such as your natural calamities, they affect your business cycle, especially for an agriculture based economy. This weather patterns and natural factors, they affect business cycles a lot. Then population growth. If the population growth is higher than your economic growth, then it will lead to disaster, because there will be no savings, and if there is no savings, there is no investment. If there is no investment, then the economy will not grow. Hence, population growth has always to stay in check. The government has to check the population growth so that it does not exceed the economy growth. We've come to the end of the video. I hope you found the video useful. If you like the video, then do like and share the video, and subscribe to the channel for more videos on different topics of SEBI Grade A 2020 examinations. Thank you.